Hello, chart watchers, and welcome to this Monday, October 15th Market Watchers Live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's take a quick look at what's going on today. 1 week after some pretty rough action last week. You can see the Dow Jones Industrial Average currently down just 39 points, the S&P 500 down 10. The NASDAQ, a little bit worse on a relative basis, down 60 points than the Russell 2000, trying to hang in, actually up 1 point, showing a little bit of relative outperformance so far today. 10-year Treasury yield hovering just a little bit higher than what we saw at the end of last week, currently up 2 basis points, 3.16%. Volatility index, something we're watching very closely, hit 28 and change last week. It is roughly flat today. We've seen a little bit of volatility. I expect at some point we'll see it pick back up again. Hard to say when. Real estate and consumer staples, two defensive areas leading the market to the upside. Both of these groups really just bouncing off of some weakness from last week. Technology, after bouncing on Friday, is back down, though. It is down more than 1% and is the laggard in terms of the sector performance today. A couple of defense stocks, L3 Technologies and Harris Corp, agreed to merge in an all-stock swap, and both stocks doing very well today, as you can see. That's lifting the defense industry, one of the better performing industry groups. And then finally, the dollar is down a bit, and gold continues its push to the upside. We talked about this quite a bit last week, but gold did make this breakout above 115, the GLD. Pulled back, held that support level, and is now broken to a new high today. So gold certainly looking better than it has in quite some time. Erin, it is Monday. We start a new week, lots of volatility, a lot of things to think about, deal with. But how was your weekend?
I had a great weekend. It was pretty laid back, watched some hockey, watched some football. I like that every now and then to just relax, not go anywhere, not do anything. So it was an excellent weekend and certainly got me prepared for this busy week that I know we're going to be having. And I'm glad to see gold finally doing something, but of course that always can concern you if it starts doing well and then you see aggressive sectors not doing well, like technology today. So
yeah, it's going to be an interesting week because, and we'll talk about this in just a couple of minutes, but usually you just don't get one big shot of volatility and it just simply goes away. I mean, normally we, tend to go back and maybe at least retest those bottoms. And you can see the bounce today is not very strong. I mean, we did finish nicely on Friday, so that was a good thing. But pulling back today after being up a little bit earlier, I don't know. I just get this feeling like we need to go down at least one more time, but we'll talk about that some more in a bit.
Yeah, we'll have to see. My portfolio is hoping we're not going to go down again, but I suspect you are correct. All right, well, what are we doing this week? We have a great week coming up. Tomorrow, I will be doing a workshop on big picture indicators, sort of my favorite ones that can give you a really good look in all three time frames. Martin Pring will be joining us Wednesday. Julius de Kempener will be with us on Thursday to talk RRG. And Mary Ellen will be back on Friday for What's Hot and What's Not. So let's get started. Let's get this Monday going. What's going on Monday setups, because it is Monday. We have earnings spotlight today, so you'll want to see that with Tom. And then 10 and 10, the first symbol is going to be GWW, if you'd like to go look at that before Tom annotates that in the 10 and 10. And then finally, I will finish off the show with the DecisionPoint report, give you a look at the weekly charts and what to expect this week. All right, Tom, technical news and headlines. I know there were quite a few economic reports today.
Yeah, kind of a mixed breed of reports here. First of all, we got September retail sales coming in. They did rise 0.1%. That's the good news. Bad news is the market was expecting a lot better, 0.6%. So September retail sales definitely disappointed. When we strip out the autos, the retail sales actually were down 0.1%, and the market looking for a rise of 0.4% there. But the October Empire State Manufacturing Survey did come in better than expected, 21.1 versus 18.8. Those were all pre-market reports. And then at 10 a.m. Eastern, right after the market had opened, August business inventories came in. As expected, they rose 0.5%. So that all translates into not a whole lot in the Treasury market. We see the 10-year Treasury yield pulling back off of that earlier high that we saw 3.25% last week, or maybe that was the end of the prior week. But we have continued to hold on to support. And again, I'm looking at 310, 311 at that area as at least short-term support. I'm not, I wouldn't suggest that the 10-year Treasury yield is just going to simply collapse if we go below that. But I would expect that to be the first area where you might see some additional selling in the Treasury market. And of course, that would result in a bounce in the 10-year Treasury yield. So something to keep in mind and to look for as we go forward. A couple of areas in the market that I wanted to talk about. First of all, you know, when the VIX is rising, it's a completely different animal in the market, I believe. And I tend to kind of avoid trading with a high volatile market just because the tendency is for the swings to be exaggerated in both directions. And it's really hard to manage risk. It makes it easier to make money if you call it right, but it's difficult to manage risk. And I really think that latter part is key in trading. So let's take a look. I'm going to show you a couple of charts in my blog from this morning. This was the current outlook section from my blog. And I was just pointing out that the 60-minute charts, if you go back and look at the last couple of periods where we had extreme volatility, they might offer up some clues as to what we can look for this particular period with all this increased volatility. So here's a chart going back to January, February. It's a 1-hour monthly chart. So January 25th through February 23rd is on this chart. And this was this is where the selling really picked up, and you can see the volatility index spiked. Now, what I was referring to is I kind of feel like we had this big move and we tried to bounce on Friday and come back up, similar to what we saw back at the end of the first week of February. And then we went back down again. You can see the VIX had kind of settled down. And then we had one more stab, put in a double top on the VIX, put in lows on the prices, and you can see those long tails. And then what happened was we came back up, went through that 20-hour moving average, which you can see during the downtrend, we really struggled with trying to get through it. But here you get through it. Not only do you get through it, but then it becomes support instead of resistance. So that's how the January, February period unfolded. I'm going to scroll down here now to March and April. And March and April, this is how the selling began again in the S&P 500. This is once again a 1-month chart, 60-minute candles. And you can see again, as we go down the 20 and then the 50, these two moving averages tend to mark the tops. And you can see that throughout this entire move down, we never got back through that 50-hour moving average. And also notice the PPO, the hourly PPO goes negative and stays negative until we start to get more bullish characteristics on the chart. The same thing had happened back in January, February. You can see this PPO turns negative and stays that way. We did actually have a positive divergence. You can see the higher PPO with the lower price. So that's something maybe to keep an eye on as we go forward. We did develop that way. You can see we did have lower price with higher PPO, but we had a 50-period test in between and we kind of reset. I could go into a lot of details here, but I'll save that for another time. I don't look at this as a positive divergence. Many do, and the textbook definition is definitely a positive divergence. But anyhow, that did end up marking a bottom. We started moving higher, and you can see for the most part, we started trading above these moving averages instead of beneath them. So let's go, fast forward, and this is where we are now. So on this chart, you can see once again, we go below that 20-hour. Here we are with the PPO on an hourly basis, still in the red. We failed at the 20-hour, went lower, bounced on Friday, and now it looks like we might be ready to roll over again. Let's get a current look at this chart. Excuse me. All right, so here is the current look. You can actually, this is not the current look. Why is this not updated? Oh, I probably have the time. That's what it was. Let me put the 15th on here and we'll get an update. Okay, here you can see. So the PPO is rising, but it's still well below the zero line. It was rising back in those other two periods, by the way. Anytime you get movement to the upside, you're going to start to slow down that downward momentum and eventually turn back to the upside. So that's what we're seeing. But you can see we still have no break above the 20-hour moving average. The VIX is pulled back, But we saw that once before, actually in both of those two prior cases, but we had another surge in the VIX. So I'm still thinking we're probably more likely than not. You can never, there's no guarantees in the market. But when you get into a volatile period, you get a little bounce, unwinding, can't get through key moving averages. My best guess is that we're going to probably go back down one more time. You can see that we are starting to roll back over. The S&P 500 currently down 12 points today. So, this is something that we want to keep an eye on, but don't be shocked if we go back down to that 2710 level. That would be 40 or 50 points on the S&P 500. And we know with a volatile market how quickly that can happen. Look for the VIX to make another run to the upside. I mean, I hope I'm wrong. I hope that the market strengthens and the volatility index continues to subside. But just based on history, I would not be surprised to see us go back down and retest it at a minimum, possibly break below, but at least retest those lows that we saw from last week. Okay, a couple of charts to take a quick look at. L3 and Harris Corp merging. You can see the huge move here on L3, and then also on Harris here, you can see the big move up 1350, almost 9%. Both these companies trying to break out. They did mention that they expect their earnings per share to be accretive in the first year. Normally, when two companies get together, you got a lot of expenses and combining, and so the EPS takes a hit a lot of times in the first year. Here, they're actually expecting to make more money as a combined company. I think that's one of the things. Both these companies, by the way, reported earnings. They both beat top and bottom line, and L3 raised their earnings guidance going forward. So a lot of good news in this announcement, and you can see both these companies doing very well today. On the other side of things, though, we had Sears filing for bankruptcy protection. And again, I don't have to stress how important technical analysis is, but Sears has been going down for many, many weeks, months. And so we shouldn't be shocked when news like this comes out. The stock actually down 19% today, down to 33 cents from the 41 close last week. Things not looking very good. A couple of areas of the market, though, that have strengthened quite a bit. I mentioned this a little bit at the top. Gold mining index, beautiful break above the moving average. You can see for the first time in several months, we've got a PPO that's going positive. The 20-day is beginning to rise. So a lot of things are setting up very bullish in the short term. And I'm going to stress short term because we know what gold has done in many of these gold mining shares over the past 7 years. I'm going to be short-term bullish, but if they start to break down at some point, I'm going to quickly change my tune there. And then also the mining index, DJUSMG, you can see also making this break. PPO not quite ready to break out, but looking much more bullish. And here's gold. GLD broke out. I know when we had Arthur on the show last week, he was looking for a breakout above 115. Erin's been saying the same thing. I agree. I think we've gotten this breakout, nice volume. I think things look much better on the gold front right now. But again, just keep in mind that in a rising dollar environment, it's not good for gold. And we'll see whether or not the dollar continues to strengthen into the second half or into the latter part of the fourth quarter and into 2019. I think it will, which is going to put a long-term lid on gold. But as long as the short terms looks good and you're a trader, I would be okay there. All right, we got some upgrades, downgrades, Erin. What do we have today?
All righty, let's get a look. There were actually quite a few. Again, there were a lot on Friday, but we have plenty to look at. So let's go ahead and take a peek here. All right, I have 3 upgrades and 4 downgrades for you. So let's go ahead and get started. Activision Blizzard will be our first upgrade. We're going to look at ATVI. And ATVI was upgraded by Barclays from a neutral to an overweight. It's still in a rising trend. I see that rising bottoms trend line right here. And it is trying, it's managed to hold the support. It didn't even have to go down to that 200-day EMA. But the PMO is still really ugly. So despite the upgrade, I would likely stay away from this. But as I said, we're trying to find some support that, coincides the 200-day EMA and that rising bottoms trend line. Lululemon was also upgraded today by Wedbush, went from a neutral to an outperform. I see that, of course, the PMO is in decline, so it's certainly not one that I'm going to recommend just based on that. But I think a watch list might be appropriate here because we do see the PMO is getting into that oversold territory where we could see that turn. The scooter still looks really good. OBV, OBV could use a little bit of help, but after today's trading, we'll just have to see where we end up. But 140 is holding as support, and certainly there's some upside potential here for Lululemon. Vail Resorts, MTN. This one was upgraded from a neutral to an outperform, and it has hit very important support right here at about $230, and it did turn right back up. The PMO is already turning up. So this one looks a little bit more tasty than I think the other two upgrades because we are making that move up. The PMO is very oversold and it is starting to turn around. Look at that OBV making the turn, and the scooter starting to improve as well. All right, let's move on to some downgrades. Actually, before we finish upgrades, I just wanted to let you know some of the other big names that reported. They had upgrades today. I'm sorry, McDonald's, MCD, PNC Bank also had an upgrade today. Ralph Lauren, Tech Resources, and Wells Fargo all came in with upgrades today by various financial institutions. Let's go ahead and get started here with the downgrades. Cliffs Natural Resources, CLF. This one, you know, I think this is worth the watch list, even on the downgrade. We do have that PMO sell signal, and it does look like it may want to make a move even lower at this point. But if we can see that PMO start to turn up and this level here of support hold, you know, rising bottoms on the PMO would be quite nice. And you've got a scooter that's very high right now. So although this one was downgraded, I think you could add it to the watch list as something to pick up maybe later. Monster Beverage, MNST. This one was downgraded by Evercore from an outperform to inline. I don't like this. There's various reasons. I'm going to point out first that 5,200-day EMA negative crossover that is on tap. That would put Monster into a bear market configuration as far as DecisionPoint. We've already lost this support level that I've marked out from the low we had back here in March. And, you know, so we've already dropped below that. I noted some gap support here that's coming up right there at about $50. So we could see it, you know, pull up there. But honestly, I think we're going to be in for a test of the May low. The PMO not decelerating at all. And that 5,200 day does not look good. Nucor Corp was downgraded today by Credit Suisse. We have outperformed to a neutral. This one is broken down below rising bottom support, but there is still some horizontal support here available at that October high, or I'm sorry, yeah, the October high, the February low, the March low. This should hold. This is a really strong area of support. If it doesn't, of course, this could be pretty ugly for Nucor, but you know, it failed at that rising bottoms. I would watch if it can manage to hold support right here where it should hold support. That might be a time to get in depending on what the PMO is looking like. And finally, our last one, Rockwell Automation, ROK. This one was downgraded from a perform to an underperform. Now, those others that we were looking at all had been downgraded to neutrals or inline. So I don't consider them quite as detrimental as a perform to an underperform. So this one, you know, Cowen and Company's telling us it's not neutral. We're actually expecting it to move lower. So it's breaking down below some support here, near-term support at those August lows, currently trading under it. PMO has just reached negative territory. Look at the scooter, the OBV. This one's pretty ugly. 20-50-day EMA negative crossover, likely to occur either today or tomorrow if it cannot get back up above the 50-day EMA, which, let's face it, is highly doubtful that it will. So I would be looking for that intermediate term trend model neutral signal to come in soon. Don't like this one on the downgrade. A couple other big name downgrades today. Dollar Tree Steel Dynamics, STLD, Tapestry, TPR was also downgraded today. That's all I have for upgrades and downgrades. It is time for the Monday setups and to see how we did last week.
Yes, it is.
What do you think? Did it turn out okay?
Well, the market was pretty bad, so I didn't look to see how yours had done. I think mine outperformed the S&P, but that still was down for the week. So
yeah, let's see, 40. Well, let's go look. So 43.01 and 108.25. Let's see, how did we do on that? I know mine is up, I think, on the day. So I think we're looking better there. Let me go ahead and share the screen, or you're not going to see anything, are you?
yeah, actually, yours was up over 44 early last week when the market was struggling. So it came back down. I think you're flat, but I tell you what, anything flat from last Monday was a pretty darn good pick.
Yeah, I have to say so. Let's see. Yep, there it is, Marcus. Yeah, not horrible. It is up by 5 cents right now from when I got in. So yeah, I'll take that. I'll definitely take that. And you were HAE, yeah.
Yeah, HAE, I just went more with the healthcare because a lot of those tech stocks and consumer discretionary stocks the last few weeks have not been strong. I had a number of setups in that area, but I was afraid to pick one. But yeah, HAE it came down. I think it's probably down a couple percent. What was it? I think I put it out at 108.
108.25.
Yeah, and I think it was 105 or 106 last time I looked at it, 106.38. Yeah. So
yep,
down a little less than 2%, which again, with the market getting hit the way it was, I'm happy with that one, although it didn't finish up. I think that chart still looks pretty good. One thing I would look for is try to get back through that 20-day moving average where it's failed the last 2 times. Last week it had a couple of chances, didn't get through. So I think once it gets back through that 20-day, I would expect it to go back up and retest the prior high.
All righty. Well, let's see. What do I have for you all today for Monday setups? All right. These were the ones I came up with. Actually, I just had to manipulate my general PMO scan just slightly. And I managed to get a pretty decent array. So let's go ahead and let's look at what we got here. So Boot Barn is going to be my first one here to look at. And, you know, we've got that declining tops trend line, and that is going to coincide just about with that overhead resistance in the short term. But I have a PMO that is trying to turn up, and we're trying to get up there to test that. That's the main reason I did not pick Boot Barn, was just because I'm not seeing that breakout just yet. I suspect we will based on the PMO, nice strong scooter. And you can see with the OBV starting to, you know, rising bottoms here with the rising price bottoms. So I like to see that. So I think this one looks fairly good. CNX Resources. There we go. This one I like because it had that, it's already made the breakout from the declining tops trend line, and it's headed up. We shouldn't see any serious resistance. You know, we could here at that 50-day EMA, but I wouldn't be too concerned until we start to get up here where we had these tops right around that 1550 area. But again, I look at the PMO buy signal. It's really a nice move to the upside, clean crossover. I suspect we're going to get that breakout just based on look at the improvement in the scooter. I think this one looks pretty good, and the momentum is now shifted. Dine Brands Global. There we go, restaurants and bars. Nice breakout today and trading above those tops we had back here from May, let's see, May, June, July, August area. So I think it's really great to see this breakout. Now I know we sort of had a false breakout back here at the beginning of September where we fell back down. But I like this setup right now. I think this has some potential to certainly get up there and test those highs that we saw before. I mean, we have a PMO buy signal sitting here. I think that looks pretty good. And the scooter just popped up into that hot zone. So I think DIN, Dine Brands, looks pretty good. Newmont Mining, and we're talking about gold doing better. I would expect the miners to enjoy a little bit of rally with the help of gold. They are a little bit more vulnerable, the miners, to the fluctuations of the market, not just the price of gold. So it's always interesting to look at what the miners are doing in comparison to gold. But right now they are breaking out just like gold. And I've got a PMO. It's still in negative territory, but it's been making a really nice move to the upside after giving us that buy signal back here in September. That signal really hasn't amounted to much, but I think it's time. I think it is time. It's going to start continuing its move up. I think your next area of overhead resistance is about $35 here to match up with those lows back there. Let's see real quick here, Spirit, and then I'll show you what I picked. Spirit Airlines. This one actually was the only one I think that came up without changing any of the parameters of my PMO scan. I didn't pick it though as my pick. I think it still looks pretty good. Spirit Airlines. And, you've got the PMO buy signal coming in, scooters moved to the hot zone. OBV, look at the volume coming in on this rally. I think that's got some great potential. 20-day EMA held very easily. 5 has crossed above the 20-day EMA. That's a short-term trend model buy signal. I guess my only concern is the fact that it on Friday got stopped, it stopped right at that high we had back in January. Was unable to get through, and it is pulling back again. So that's one of the only reasons I didn't pick Spirit, but I thought it looked pretty good. What I ended up picking was Shoe Carnival, actually, in the cyclicals. So I have the breakout from this declining tops trend line. I have the PMO turning up, which I like. I actually have a scooter that's been in the hot zone for quite some time. So I know that it has some internal strength and also some relative strength when you look at it compared to its universe as far as its scooter number, and it's 97.6, looking good. I'd like to see a little bit more improvement on the OBV, but I am starting to see it. We have two bottoms. The second bottom here is a little bit higher. The first time we've seen rising bottoms on the OBV. I mean, obviously just barely, but certainly better than what we've seen previously. And it is coming alongside that PMO turning up. So I picked Shoe Carnival, SCVL, and it is currently at, let's see, I had put it in when I got it. Oh, see, now it's at 39.42 and I had it at 38.85 earlier this morning, but I will take what it says. But I'm glad to see that it's doing well right out of the gate here.
Yeah, and actually SCVL is interesting you picked that one because I was looking at it probably about, it was this time last week and I just wasn't adding anything. And this was actually one that had turned around pretty nicely at gap support. It's on my strong earnings chart list, and here you can see that's where it had gapped up from on the earnings report, and it came all the way back down, hit that gap support. And like you said, many of them on my list, though, have struggled to get back through the 20-day moving average. So I really like SCVL getting back through that 20 and starting to move higher. So I wouldn't be surprised. I kind of agree with you. I think it could head back toward that August high. The other thing I just wanted to point out, too, is it's in pretty good area with the apparel retailers. We've pulled back since early September, but overall, this group has been pretty strong. And when you look at SCVL relative to the group, it's rising, relative to the S&P rising, and the retail group actually breaking out relative to the S&P 500. You look at the group and you say, well, it's not breaking out, but it's doing a lot better than the overall market. And so if the market starts to strengthen, you would expect not only retail apparel to pick up, but also I like your pick, SCVL. I think this is a really strong company.
Excellent.
Yeah, so let's take a look at a couple of stocks that I have on my list. I'm going to take a little bit of a risk. I'm not doing it with my money, though. I can tell you that right now. But I do like AMD because it's been such a strong performer relative to its peers. It also has one of the highest scooter ranks among all the large caps. And it's had a pretty nice pullback. I mean, the stock ran from less than $10 back in early April to 34 and pulled back and is now just kind of, I don't know, this back and forth consolidation. If the market sells off and that volatility picks up, clearly AMD could have more downside. So you definitely want to keep a stop in play. But I think if the market starts to turn back up, I would expect Advanced Micro to actually lead back to the upside based on what it has done previously. Here's the semiconductors breaking down, but here's AMD relative to its peers. It's been one of the strongest stocks, if not the strongest stock within the semis, and been a great outperformer versus the S&P. But the problem with the stock is more about its industry group than it is about the individual stock. So I'm going to go out on a limb here a little bit, but I like AMD on this pullback. I'm going to say let's go long here at 26.39. So that will be my pick for this week. I do have some other stocks that I will go through and go over here. So let's take a look at them. Apple. I think Apple's held up very well given the overall market turmoil the past couple of weeks. It's pulled back, but I think it could be a really nice opportunity. We have some good support around 214, 215. So again, I think you can keep your stop pretty, or your stop pretty tight. Yeah, confusing myself here, but I think you can keep that stop very tight, probably around 214, maybe an intraday around 212, something like that. And I'd be looking for it to head back up to about 232, 233 area. Apple will be reporting in a couple of weeks. I would not be surprised to see buyers come in ahead of their report. BSX, this is actually in healthcare. So maybe if you want to be in an area that it hasn't been getting hit, like technology and consumer discretionary and some of the internet stocks and so forth, that communication services, that area. Here's a stock that had been performing extremely well heading into early October, but we have pulled back, and the overbought conditions, you can see the RSI dip back to 40. We're trying to turn back up, and this is what I've been seeing a lot of. Stocks that have been healthy, pulling back, hitting their 50-day, and struggling to get back through that 20-day. So it would be more bullish if we could get that breakout there, but I do think BSX is very interesting from a reward to risk standpoint at this point. The other one I almost went with, and I didn't, mostly because it's a smaller company, and I'm just a little concerned because the small caps have underperformed so much here of late. But this was a company that was under tremendous accumulation. Stock ran up quite a bit. I think it's been consolidating. It did go through the 20-day, reach the prior high. So I think it's beginning to show that this 15, maybe 14.75 area up to about 16 and a quarter is a range where we're just consolidating. And I expect eventually we're going to go back up to this 17.5, 18 area. And if I pull this up on a relative chart, you'll see that this is part of the restaurant group, which has been, I think Mary Ellen talked about this on Friday. The group has definitely been strengthening. You can see this huge move up off of the low that we saw back at the end of June. And you can really see it when you look at it, the group relative to the S&P 500. A lot of outperformance in the restaurant and bar stocks as we go forward, or as we've been moving forward. So I think the fact that this one had such a huge run up, pulled back and consolidated, it's in a good group. This was the other one I was thinking about. But the small cap, the fact that the Russell 2000 has yet to really start to outperform again, that just bothered me. So I'd want to keep a fairly tight stop here as well. Let's go through a few more, and I'll go through these pretty quick. On the relative chart, let's take a look at OLLI, which is Ollie. I mentioned there was one broadline retailer that's actually been a better performer than Amazon, or there's at least one, because Ollie's Bargain Outlet Holdings has been a better performer than Amazon. And when you look at this chart, it's been going up for the most part, straight up from left to right, pulled back, hit that 50-day. A nice little 10, 12% pullback. And you can see there's the broadline retailer struggling over the last 6 weeks or so. But Ollie, relative to the group, has just broken out. And Ollie, relative to the S&P, has been actually moving higher, even though overall you could see where it's been pulling back. So it's been holding up well relative to the S&P. And I think that's a good sign as we go forward. Last three, I'll just go quickly. Dave and Buster's. I think this pullback gap support looks interesting here. MDT, this is Medtronics, talked about a big breakout that we saw back a few months ago in July, taking out these prior highs. Been a great performer. It's pulled back near this gap support level. I think that's worth considering. And then the last one I had is SCI, which has also done pretty well. I think there was a negative divergence. We don't see the PPO here, but I think there was a negative divergence here. It's pulled back to the 50-day and close to this price support. So I think the, again, reward to risk on this one looks interesting as well. So let's take a look at our recap of our Monday setups and our pick for the week. Erin is going with SCVL, and I am going with AMD, both of which are in fairly aggressive areas of the market. So hopefully for us, the market will begin to strengthen.
Yeah. I did notice when I was doing those upgrades, downgrades, all three of the upgrades that we looked at were from the cyclicals sector. So just interesting there.
Yeah, maybe that foreshadows a move higher in the group. We'll see.
Mm-hmm.
All right, well, let's move on. Earnings Spotlight. Of course, twice a month we have John Hopkins from Earnings Beats on here. I think he'll be in next week. But for this week, what I thought I would do is take a look. I just mentioned some of the restaurant. I'm going to pull up the chart here, and we'll take a look at that restaurant chart because I think this is pretty important. And I really think that Mary Ellen touched on it last week as a group that had been hot. It pulled back. But I think overall, and this is, if we look at a weekly chart, I think you'll see that this is a group that hit its high back in January, came down, put in a pretty good low around 1375, 1400. We went back and tested it, double bottom, and then came back up, tried to get through resistance, failed. And I think all we've done is gone back, put in like a handle off of what could be referred to as a cup here off of a longer term uptrend. Cup, handle back to the 20-day. And so this group's been leading, is performing better than the S&P 500, as I just showed a little bit ago. And so this is an area that I think as we go into earnings season, I'm beginning to wonder if maybe some of the individual stocks within this space might have a nice run to the upside. So I thought I'd go through some of these. First one I want to look at is Starbucks. Starbucks is actually, if you've been watching, after getting hit really hard back in June, stock was down to 47 and almost hit 60 last week before pulling back. And now here we see that strength building again. I didn't like that tail. It was a big false breakout above these prior highs back in May and June. And sure enough, in the near term, we pulled back. But now we're coming back up again. I think the volume trends have started to turn more positive. Starbucks reports their earnings, somewhere around that October 25th to 27th period. I didn't go check all these companies for earnings, but I can give you kind of a general sense of when you might be looking for it. You might check it out. But Starbucks typically reports around the 25th to the 27th of the month. So it should be coming up here in about 10 days. And so maybe latter part of next week. But I think this is a company could make another run heading into its earnings report. Wouldn't be surprised to see a nice report here. So all of these companies that I go over are all in this restaurant and bar space. The next one is Chipotle. Now, Chipotle has been underperforming the restaurant group over the past couple of months, but it was wildly outperforming prior to that. So I think the group has been consolidating. I don't see any massive volume indicating distribution, and we are down what I think is a very important support area between about 420 and 430. Last week or on Friday, actually, we got down as low as around 425, and we bounced a little bit off of that level, but we are down $1 today. The stock was just over $520 2 months ago. And so I think as we get closer to earnings, they tend to report about the same time as Starbucks, kind of in that October 25th to 27th range is what I'd be looking for. You might look ahead, but don't be surprised if Chipotle begins to make a run as it approaches its earnings report. Next up, Yum Brands, YUM, beautiful move. And literally just 5 days ago, we were at a high on Yum, even though you know what happened to the market last week. So this is a company that on a relative basis has been performing awesome. It did have a negative divergence. You had higher prices, lower PPO. We went all the way down to the 50-day moving average, not quite to the center line on the PPO. But I think we've kind of resolved some of those momentum issues. And now you can see Yum Brands beginning to strengthen again. Might see a bit more consolidation near term, but I think this is a company that you might see moving into earnings. They would be expected to report in early November. So you have about 2 weeks prior to an earnings report there. McDonald's. Again, last week also had a multi-month high. You can see up over that, or close to that 172 level. Pulled back $10 last week. but it is starting to strengthen. Let's see if we can get through that 20-day moving average. McDonald's tends to report in the last week of October, so it should be coming up fairly soon, as many of these are. Dunkin' Donuts, DNKN, pulled back, I think put in a double bottom here around 71, starting to get back through its moving averages. Like Starbucks and Chipotle, this one tends to report right around that 25th to 27th time frame, so we're a couple weeks away here. But watch Dunkin'. I wouldn't be surprised. This is a company that's only $4 off its high from early September, whereas, again, we know what the overall market's been doing. So I think this has held up well. We continue to put in higher highs, higher lows. Don't be surprised to see a pre-earnings run up here in Dunkin'. All right, WING, Wingstop. I know Mary Ellen talked about this one last week as one of the stocks that individually has been hot. Well, we're seeing that continue. Look at the volume on Friday bouncing off the 20-day, and we got good volume today on a breakout above this double top. Assuming we confirm, I think Wingstop's another one that looks really good as we head toward its earnings. They normally report in early November, so you got a couple weeks here, 2-3 weeks here. All right, HABT, this is one I just mentioned as a possible Monday setup, but here's the chart pulling back to this key area. Take a look at the last earnings report. Huge gap up here. I will caution you, though, because the one before that was a big move down. I don't like holding stocks in the earnings because you can see the disparity, what could happen. It could go either way. I just love the fact that we had such a big move, very heavy volume, and we're just simply consolidating here, trying to put in this double bottom. I think HABT could make a run. They tend to report in early November as well. All right, just a few more here. FRGI. Fiesta Restaurant Group. I believe Mary Ellen also pointed this one out last week, but you can see the move back above the moving averages, which I think is critical. But also what I'm seeing is off of an uptrend. I'm going to stretch this chart out a little bit for you. But if we go back a year, you'll see we had a huge uptrend in play. And what I see is a left shoulder, a neckline, the head, the right side of the neckline. We pull back, get close to the moving averages. Maybe we go back down. You can see we never had a close below about $27.75 to $28. And earlier today, we got down to 28.25. We could be putting in an inverse right shoulder here, and a breakout with increasing volume above 30 would measure up to 35. And again, it's in this space that's been looking pretty good. I wouldn't be surprised to see a move up and a breakout heading into its next earnings report, which is should be expected in early November. Play. This is Dave & Buster's. I mentioned this one just a bit ago in my Monday setups as well. Here was the gap up. Look at the volume and look at how it continues to move up. So normally that's going to give you pretty good support at the top of the gap around 60. And then that intraday low, which looks like it's around 58.5. This stock was just up to close to 67 a couple of weeks ago. And now here it's bounced a little bit off of today's low. But Thursday's low and today's low kind of into this range between $58.50 and $60. I think the reward to risk here looks good. Now, they will not report again until early December. But with this pullback, I think this is a company that could take its cues from the overall restaurant group. And if this group continues to strengthen, this has been one of the stronger stocks in the space with this breakout. And if you wanted to see a relative chart just to kind of highlight what I'm talking about here, here is Dave & Buster's chart. Here is the restaurant and bars. And here's Dave & Buster's relative to those restaurant and bar stocks. So on a relative basis, it's broken out versus its peers. It's broken out versus the S&P. Continues to hold up pretty well with the S&P. So while it's been pulling back, a lot of that is simply because the overall market's been pulling back. It really hasn't lost much ground to the overall S&P 500. And now with the restaurants and bars beginning to pick up relative to the S&P, it's always nice to be in leaders in groups that are beginning to lead. So I think Dave & Buster's offers up pretty nice opportunity here. And then the last one I have is BJRI. This is BJ's Restaurants. Nice gap up. I believe this was an earnings report. They tend to report in the latter part of that first month following the calendar quarter. So the June 30 quarter, they reported at the end of July. You should expect the same thing. We're going to the end of the quarter was September. should be in the last couple of days, probably of October. We'll be getting an earnings. I wouldn't be surprised, and watch for that 20-day moving average. This is another one of those stocks that's been struggling to get through the 20-day moving average. But if it does, I think this is one that could run up toward its earnings report as well. So those were 10 of the stocks in the restaurant and bars. I really wanted to just feature the stocks within that space, but we'll pull up a quick summary. You can take a look at these 10 stocks and continue to watch restaurants and bars, because this is a part of the consumer discretionary group that is somewhat aggressive. And when they lead, they tend to really, take some leaps to the upside. So those are 10 stocks within the space that I think could be very interesting as they head toward their next earnings report. Okay, so let's go ahead and wrap that up. We did have a poll today while we're talking about earnings, and I thought maybe we could just spend a few minutes talking about this poll. But there were a number of stocks. I think there were 10 stocks over the course of the balance of this week that have market caps above $100 billion that are going to be reporting. And 6 of those companies are shown here. And what I wanted to do is just see, based on everyone's perception and thoughts and all, which ones you believe have been the best companies in terms of their market reaction over the past 4 quarters. And I don't know, did you weigh in on this one, Erin?
You know what? I said none of the above, but I'll be honest, I have no idea. So,
well, you were almost right. There was one that has been higher on each of the last 4 quarterly earnings reports, and I'll get rid of United Health Group. That was not one of them. In fact, while we got each stock, I'll tell you the numbers here. So United Health has actually gone up 3 of the last 4. It's actually gone up 5 of the last 6 quarters. But last quarter, it dropped 2.6% after it came out with its earnings reports. I think United Health and that whole healthcare providers area remains very strong. So I'm not surprised that the majority, well, not the majority, but the highest percentage went with United Health. I probably, without looking at the charts, I probably would have guessed the same thing. I think I would have gone with United Health. I remembered Netflix did not beat last quarter, so I knew it wasn't, if I had done it on the fly without looking at the charts, I would not have picked Netflix. But neither one of those was the answer, and neither was none of the above. Abbott Labs has gone up 3 of the last. Actually, Abbott Labs has also gone up 5 of the last 6 quarters, but it had a very tiny 0.5% drop. Not last quarter, but the quarter before. So that eliminated Abbott Labs. But Abbott's been a pretty consistent outperformer with its earnings. So that was also a good guess. The winner is actually Honeywell. Honeywell has outperformed in each of its last 4 quarters. It's gone up 3.8%, 1.7%, 2%, and 1.2% over the last 4 quarters. Johnson & Johnson has actually gone down 2 of the last 3 quarters. It went down, went up in the last quarter 3.5%, but the 2 quarters prior, minus 0.9% and minus 4.3%. Now, the one other award that I would hand out here, if you're looking for the one that if you had simply invested prior to their earnings and sold the next day at the close and did that for the last 6 quarters, the absolute winner without a doubt would have been Netflix. So, and that's probably what the 25% we're thinking about, because Netflix has had some big positive reactions. In fact, it lost 5.2% in the last quarter, but prior to that, it had gained 9.2% after earnings, 10% after earnings. It dropped 1.6%, and then the prior quarter it went up 13.5% after earnings, and the one before that was minus 2.6%. So Netflix tends to have really big positive reactions when it's good, and a little bit more modest losses when they come out with numbers maybe that the market didn't like as much. So Netflix, I would say, simply from an absolute return standpoint over the past 4 quarters was the winner. But as far as consistency, Honeywell.
Wow. I definitely would not have guessed that.
I would not have either. Honeywell would not have been the one I would have picked. In fact, I probably would have gone with maybe all but Johnson & Johnson before Honeywell. But anyhow, those are the numbers.
All right.
So let's do the 10 and 10.
Yep, let's do it. Actually, it's starting just about on time too. That'll be excellent. All right, so we had 31 requests, so I'll be going through those, but let's take a quick peek at the RRG, see if there's any obvious outliers. Well, not any obvious ones, a couple of interesting ones that I'll be looking at, giving Tom. And then here are the sectors, and it's pretty mixed. I mean, we pretty much have a mix, the cyclicals, technology, healthcare. I wouldn't say that any of them is really popping out at this point. So anyway, let's go ahead and get started with WW Granger.
This was an interesting stock. And when I saw that this was going to be the pick for the day, that was one of the things that actually kind of jogged the whole poll idea. Let me show you. John Hopkins actually had written about this over the weekend, or over the prior weekend in the Chart Watchers. So let me show you first, before I annotate the chart, a chart that he had included in his Chart Watchers article. He said, here's a stock that regularly beats its earnings estimates. And when you look at Granger, GWW, take a look at their last 4 earnings reports. 290 versus 257, big gap up and continued move there. Just blew away the earnings the next quarter in January 2018. Once again, gap up, move higher. This quarter, we got the gap up, but we didn't really move higher. We put in a little bit of a black candle, went all the way back down to the 50-day moving average, but it was a gap up with its earnings. And then finally, the last quarter, another big earnings beat, another big gap up, and continued move to the upside. So this is a stock, and they'll be reporting their earnings, I guess, probably in about maybe 3 weeks or so, 3 or 4 weeks. But it does tend to do very well, or it has tended to do very well. And the fact that it's been going sideways might be setting up an opportunity here. But let's take a look at the chart. So GWW on a weekly basis, I pulled up the weekly chart because to me, I do see a little bit of an issue with momentum. As we were putting in the most recent highs here back in August, look at the volume drop way off of what we had seen previously. And that, coupled with a negative divergence in play, suggests to me that we could see a 50-week test. So I think that, you can see the momentum starting to slow. We're still above the 0 line, but certainly it's pulling back quite a bit. And we do still have a potential pullback to this prior resistance level, which is now support. We did pull back in early July to about this 290 area. And so I think that there is a shot, especially if the market starts to sell off again. I wouldn't be surprised to see Granger maybe start to move lower and head toward that 50. But if it does that, I think it could be quite an opportunity heading into, as you get closer to the earnings report based on what we've seen the last 4 quarters. So very lengthy explanation, but I thought it was interesting what John had posted in Chart Watchers, because I did not realize this company had provided those kinds of reports. But this has been one of the better performers in the market, as you can see, from this huge run up over the last 15 months or so. And this pullback could be an opportunity.
All right. Very interesting. I'm glad I was able to get you excited about the first 10 and 10 pick. That's kind of nice. All right, but our next one, let's see, which is the most popular in the chat room currently? Well, GDX, Gold Miners ETF.
Yeah, like I said earlier, I'm not a fan of gold longer term, but hey, you can't argue with what's going on in the short term. We got big volume, we got breakouts, we got the 20-day turning up, crossing above the 50, and when you look back, it hasn't happened in quite some time. So this is a really nice pattern. I mean, again, I'm not a huge fan of down-sloping necklines, but I could even draw a reverse head and shoulder breakout here. So there is your downtrending neckline. Here's your left shoulder, neckline, head, right side of the neckline, right shoulder, breakout, heavy volume. This would measure up based on this pattern, a couple more dollars, maybe $1.75 from here. So I don't know, maybe another, just on the pattern alone, maybe another 50 cents, 75 cents, and then we'll see what happens. But my big thing with gold right now is it's short-term bullish, long-term bearish. So that tells me that as long as the short-term chart remains bullish and it continues to act bullish, then I'll stay with it. But if it begins to turn at all and fails to hold, say, the rising 20-day moving average or this neckline support, which, normally if you have a reverse head and shoulder breakout above the neckline, that becomes support on a pullback. So I'm going to say this 19 area on GDX is very important to me going forward. If it were to break down below that, I would be out of it because the long-term chart is weak. But short-term, I'm gonna stay bullish here, or well, I'm gonna turn bullish here, I should say.
Okay, sounds like a plan. All right, let's go ahead, and the next one I'm going to give you is Kronos Group Healthcare, CRON.
Yeah, this is one I talked about with Mary Ellen. I remember this stock, and I was actually even thinking about buying it. And I didn't want to buy because I just didn't want to commit to the market the way it was so volatile. But now I wish I had. This was a really good test of key support. And I forget what stock she was mentioning within the cannabis area, but this is one that had come down very nicely to support. And I actually like this one better just because it had huge volume moves to the upside, was very weak for about a month, but you can see the volume was much lighter. We got down, we put in this high volatile candle, the high wave candle with big tails out of both sides. That just tells me that there's a battle going on, and that's a really critical area. And we have bounced so nicely off of that support area. I think the stock looks great. I would look for maybe a move up to about 13.50 to 14. Just keep in mind that you are in a very aggressive area of the market, and you can have whipsaw back and forth. So here's your target, and here's your support area.
All right. Let's see. Next one we'll go with Camping World, and that is CWH.
Struggling a little bit here. It is beginning to show a little bit of strength with increasing volume, but let's see if we can get through the recent resistance. So for me, I'm kind of watching this area right there. You can see we had a little bit of a breakout and then came right back down, but we held that rising 20-day. PPOs turned positive. I definitely see some bullish things happening under the surface here, but let's get this breakout above, say, 22.25 and get the volume picking back up. And if we do that, then I think we have a shot to maybe make a run at 27.
Okay. Next one up would be NOG. It's our only energy sector request.
All right. Northern Oil and Gas, I think the pullback to the 50-day moving average is looking pretty good. Look at the volume coming in on the breakout above that double top. So I can annotate that double top going across. I would have liked to have seen it hold in terms of support on the way back down, but here was the breakout, and you can see the volume is much heavier than what we had seen previously, but we were simply overbought. So the overall energy group pulled back. I would now be looking at this recent low as support. I could trade the stock here. If I did, I might keep a little powder dry and get a second entry closer to maybe 350. But my target then would be all the way up at about 445 or so.
All right. Next one up, HSC. And that is Harsco from, it's our only industrial sector.
All right, I'm going to stretch this out a little bit, just see if we've got a trend line or something going on here. I could maybe connect these lows. I don't like this double top breakout with increasing volume, failing to hold and losing those moving averages. So I think in the short term, I wouldn't be surprised maybe because we are oversold for the first time in quite some time. Maybe we get a bounce to that 20-day moving average. So I would be maybe watching. If I owned it, I think given the overall market, I would use any kind of a continuing bounce to that 20-day maybe as an opportunity to move to the sideline and just raise some cash. Because the volume you can see has picked up on the selling to the downside. If I'm watching as to have a stop to the downside, I think you've got pretty good support right in here around $24. We got close to that on Friday, trying to turn higher. So I think we're trapped in a short-term trading range between 24 and about 27.
Okay. Let's see. The next one will be IIN. It's Electrical Components Industry Group.
All right, IIN. Yeah, I mean, this is looking like a head and shoulder breakdown. Kind of see that neckline coming across here, left shoulder over here, right shoulder, head in between. And this is a classic topping pattern. I mean, you're going up, you have higher prices, lower PPO, negative divergence on that head. You got a neckline, and then on the breakdown, if there's one thing I would say that maybe is a little bullish, is that the breakdown wasn't on real heavy volume. But it's one of these stocks that I wouldn't personally give a whole lot of room to the downside. I think we had a breakout and a test of support right here at about 45. That's where we are now. I think this is a stock that maybe is going to trade in this 45 to 55 range. Of course, if the overall market goes down, I would not. I wouldn't be holding if we break 45. I'd be real careful to the downside.
Okay. Let's see, for our Canadian friends, let's do Toronto Dominion Bank, which is TD.TO.
Yeah, breakdown like all the other banks. I would like to see that pullback from back at the end of May hold. And the reason is we went almost straight up right here. We went almost straight up, pulled back, put in a nice support, and then broke out. We haven't gone below that level. Now, in the short term, this is a broken chart. PPO is horrible. Price action's been horrible. Volume's been heavy on the selling. But we did bounce off of this key area around 73.50. So I give it a decent chance to perhaps continue a bounce back up to the 20-day. But I don't know that I'd be looking for much more than that. So if I'm in it, I would be thinking about trying to manage my loss. And if I got a pop back to the upside near that 20-day, I think I would take it and see if you can get through the 20-day. I don't think I would hold hoping that I get through.
All right. Next one up will be MO. Let's see, what is that? Oh, yeah, Altria, consumer staples, tobacco.
Yep, tobacco stocks have been beaten up pretty good. And actually, I think it was Mo. Did I have that one? I was looking at a stock, and I'm pretty sure it was Mo that had, or no, it was Philip Morris. It was PM that had gone down 5 of the last 6 quarters with its earnings report. So this is a group that has really been under pressure. You can see a lot of heavy selling. We've made our way almost all the way back. Actually, we have made ourselves all the way back to where that big volume selling began. So let's draw a line right there. So here is where we were. Here's all that volume, the selling. Look at where we got. We've got all the way up to the top. And the one thing that bothers me about that top is that is a shooting star candle with a long tail above this resistance area and failure, and then right back down. And look at the volume pick up to the downside. I would be watching this one very closely in this trading range. Again, this is kind of similar to gold, maybe not as bad as gold, but just a group overall that has not performed very well. And you can see these recent lows. If this is truly going to remain an uptrend, we should not close below 60. So let's look at 60 to say 63.25 as our current trading range. And let's see which way we break here first.
Okay. And our final one, I think you've heard of it before, Twitter.
Yeah, it's in a bad space. And the thing is, internet stocks tend to do really well in the fourth quarter, but that has not been the case. And of course, it doesn't happen every fourth quarter, but that's their historical tendency. Twitter has been struggling at the 20-day. It does have a positive divergence. And on the last bit, well, the volume did pick up last week on that breakdown. I'm looking for something to give me signs to get into these stocks, and I'm just not really seeing it at this point. I would pay close attention to this 20-day moving average. If we can get through and close above it and get some volume coming in, then maybe we have a shot to get back up to the area of the last breakdown, which was at about 31.25. So if we get through the 20-day, I think we have maybe another 10% pop perhaps in this stock. But the problem is you're in a downtrending stock. So be careful of assuming it's just simply going to go up to that level. These downtrending stocks can fail, turn back lower at any point. So you want to make sure your stop's in play to the downside as well. And I'm going to say that gap support, which was right at about $27, we were right on it. We gapped beneath it, and we did rally where we needed to. This is kind of the range I think is squeezing here on Twitter. I'm not a fan right now, but let's see if we can get some volume and take out that 20-day. That would be the first step.
All right, excellent. And that concludes the 10 and 10. And here are the symbols that we just went over. I will have those up in the Market Watchers Live chart list, which you can get to by going to the blogs tab. Click on the Market Watchers Live blog, and the link will be right there at the top. All right, time for our final market update. What have the markets been up to? Well, I just took a look at this, and interestingly, we are seeing some resurgence back into positive territory for a few of the indexes. That would be the Dow is one. It is now up a little over 32 points. S&P 500 and NASDAQ are still trading negatively, but both are trying to rally up into positive territory again, with the S&P 500 very, very close to hitting positive territory. S&P 100 down slightly, formed a little bit of a double bottom here, also trying to make it back into positive territory. What's interesting, S&P 400 and Russell 2000, mid and small caps.
Erin, your screen's not up.
Oh, well, that would be helpful, wouldn't it? There we go, right? Okay, let's get back to where we were. All right, so the point I really want to make here is the fact that we are seeing, still not working, huh? I could see it.
No, I can see it. You're good.
Oh, okay, good. All right, perfect. Okay, so, well, come on back. All right. So right now the Dow is up a little over 56 points since we just talked. The S&P 500 has now hit positive territory, up just about 161. NASDAQ still in the negative, as is the OEX. But like I was saying, S&P 400 and small caps, Russell 2000, really are continuing a rising trend that they started on Friday. So I think that's very interesting to note. Canadian markets are up slightly, and the TNX also up today, reading 3.16% currently. Notice UUP, big gap down, consolidating sideways. So what do we expect with gold? And we get it, big gap up and a consolidation sideways. TLT, mostly unchanged, down 4 cents, reading 114.43, and USO is down about 1/4%, reading at 15.08. And I wanted to take a real quick peek over here at the short-term chart that I have for DecisionPoint. I wanted to make note here that the VIX is now moved back up into the Bollinger Bands. And, we got that piercing, and then it's starting to come back up. And then we also had back here these selling exhaustion readings. I was looking for a move to the upside by the end of last week. We got that little rally pop. But now that we're moving back up into that Bollinger Band, I don't know. I think we're still kind of vulnerable. We're still getting readings on the VIX. Well, let's see, right now, still over 20. So I just thought it was interesting. We're back in those Bollinger Bands, so we could see a continuation. More than likely, from what I'm looking at here, I'm looking for more sideways action, really. That concludes the final market update. I'm going to pass it back to you, Tom, and get ready for the DecisionPoint report.
All right. Yeah, I just want to follow up on the S&P 500 here, because this is something I talked about early in the show. So if you weren't here with us earlier, the past couple of times where we've seen the volatility index really shoot up, like back at the end of January, early February, and then again in that March-April period, we really struggled initially to get back through the 20-hour EMA. And here's the S&P, and this is a current look at what we're doing here. We gapped up back on Friday. We pulled back, basically filling the gap, and moved back up at the end of the day to challenge that overhead resistance. And you can see now that that price resistance where we've been struggling also coincides almost exactly with this 20-hour EMA, which is at 27.73 currently. So if we could start seeing the S&P above that 27.75, 27.80 level, then I think in the near term, what that likely would mean is perhaps this next level where we had moved down and risen back up to about 27.95. That would be the next level that I would look for. And I think on the daily chart, you can see it here. So we went down, we gapped down, and you can see that reaction high with this tail up to about 27.95. I think those are the next two critical areas to watch on the S&P as we try to unwind some of this crazy volatility that we saw last week. So with that, turn it back to you, Erin, and let's get that update on the DecisionPoint report.
Yes, the DecisionPoint report. All right. All right, so here is our DecisionPoint report for October 15th. And I wanted to show you pretty much what I'll do is go through the weekly and daily charts and show you what DecisionPoint signals are looking like for the large cap, mid cap, small cap, as well as what we call at DecisionPoint the big four, dollar, gold, oil, and bonds. And then I'll also give you a look at our DecisionPoint indicators and see what they're currently saying. Really interesting, the indicators right now, I have to say. All right, DecisionPoint scoreboards. I did get very important changes, signal changes come in on Friday. And one of those would be the NASDAQ 100. We came in with that intermediate term trend model neutral signal.
Hey, Erin, it's the slides are not showing in full screen right now. I'm just still looking at the first slide.
Gee whiz, I don't even know what's going on here. Let's try a new one.
There you go.
Okay, good. Thank you. All right. NASDAQ 100, I got the intermediate term trend model neutral signal on that. Actually, this does not look like my current board, but I do know this came in. The other one that was very interesting that I saw come in was on the Dow. We do actually have, I think that one, well, let's go look at the charts. I'll show you exactly. Sorry about that not being completely up to date as of Friday. All right, so let's start with the Dow. And we have the PMO sell signal. Obviously, momentum has just, crashed with this this big correction. I think what I was noting when I looked at all of these large cap indexes that I want to point out is that we have, the 200-day EMA is holding up currently as support. We did pop below it on some of these indexes, but in general, they're holding. What I'm watching closely are these 20 and 50-day EMAs. As I noted on those scoreboards, the NASDAQ has already had that negative crossover between those 20 and 50-day EMAs. And now I'm just watching and waiting to see whether we get the signal on the Dow. Now let's see what we have here on the weekly chart for the Dow. We have a PMO sell signal. I say that it is on tap because it was not there last Friday. And, we only log signal changes, weekly signal changes, after the last trading day of the week is complete. So if we continue, and on Friday we still see this configuration, we will see a new PMO sell signal. There we go. All right, NASDAQ 100. And there you go. There's that intermediate term trend model neutral signal where we had the 20 cross below the 50-day EMA. There we go. What I'm watching again now, you've had the 200-day EMA. It didn't actually hold up for the NASDAQ 100, but as soon as it hit support here at that April top and the lows here from May, we did end up getting that bounce to the upside. And currently, we are trading above that 200-day EMA. The PMO is now very oversold, and we're very stretched out, and I know that we're all still feeling the pain from the decline we had last week. But we are sitting in a spot where we would want to look for it to move up. We've made these tests, and in fact, when you look here at the NASDAQ 100 weekly chart, we came down and test rising bottom support, and we did manage to hold it. We've moved back and are trading now this week so far above the 17-week, the 43-week EMA. I'm just concerned about this IT PMO sell signal that came in on the NASDAQ last week. Certainly a concern. Everything is set up that this would be a great place to bottom and start resuming the rally. Unfortunately, all these indicators are still looking negative, and the VIX is still very high. So there's still a lot of uncertainty. I wouldn't be playing this as the beginning of a new rally just yet. And a lot of that is because we are seeing these intermediate term trend model neutral signals coming in or nearing where you're going to get the 20 to cross below the 50. Now, a neutral signal is, we look at that as not shorting and not buying. So cash or fully hedged. So at this point, we're getting ready to have that neutral. Honestly, I was having issues when we had the 5-day EMA cross below the 20, and we had some issues on the indicators, and I'll show you those shortly. OEX weekly, still holding that rising bottoms trend line, holding up the 43-week EMA, just barely, but we did get that new intermediate term trend model sell signal, PMO, intermediate term PMO sell signal came in on Friday for the OEX. So, you know, the only thing that I can say is that when we get these sell signals, you know, in the past, they used to really be detrimental to the market, and we would see a lot of follow through to the downside. But, you know, as of late, I would say here's one that came in. We had a little bit of decline, but we headed right back up. We had another sell signal back here, and it didn't amount to much at all in 2017. This one right here came in, and it came in a little bit late. But notice how late it did come in, and then we ended up on a rally. So while I'm concerned about this PMO sell signal coming up and showing up on some of our other large cap indexes, I'm not completely bearish here. I just, there are too many things here that are telling me right now not to be looking for a giant corrective move, but not to look for a big time rally either, guys. Sorry. 50-day EMA negative crossover, that is in process right now. So that is on tap to come in at the end of the trading day. I will be writing about signal changes from Friday and today in today's DecisionPoint blog for Monday. All right, S&P weekly chart, again, holding those rising trends. Like to see that. PMO sell signal it did come in on Friday for the SPX, for the S&P 500 in the intermediate term. All right, IJH, mid caps, you know, clearly mid caps and small caps have gotten hit particularly hard on this correction. They failed at the 200-day EMA and did continue lower. I think that there is room for them to move lower, but I look at a PMO that is really oversold right now. I would like to see it start decelerating. Maybe if we can get a little follow through or just some consolidation or a pause, we might be able to see it turn back up. But that would be a great opportunity. I would be watching for that turning up of the PMO. But you can see even after that big January decline, the PMO did not sink as far as it is right now. Okay. IJH weekly chart. Here we go. And there's that failure of the rising trend channel. Serious stuff. PMO sell signal came in as well on the weekly chart. Also bad news. At this point, I'm looking at that 175 level. If we're going to continue to correct right now in the markets, I don't think we're going to do it just yet. I think we're going to have a little bounce. I think, Tom, you've been on board with that we might see a little bit of a pause or bounce here, but we're still really vulnerable to some more downside action. And I would say on IJH, I'd be looking around 175. All right, IWM, we can see also drop below the 200-day moving average, PMO sell signal, and again, like IJH, very oversold PMO. There's the breakdown from the rising trend channel on IWM. Not quite as serious looking as it was on the on IJH. But we have that PMO sell signal again that's coming in on the weekly chart. We don't see those that often, so they are concerning. I think there is certainly room for the Russell 2000 to fall further. Right now, you know, looking at today's action, it'll be interesting to see which recovers, if we're going to get a recovery through the small caps and the mid caps and have the large caps follow, or are we going to see the large caps start to help with the small and mid caps? At this point, I think that the small caps have a little bit better opportunity to turn up to the upside, simply because, let's go right back to this chart here. Whoops. Yeah, I think that they have the best chance to turn up, mainly because they have gone so far below their 200-day EMAs, and they're getting ready to hit some important support. So I think we're going to see them probably perk up before we see the large cap indexes do so. The short-term indicators, clearly oversold, but they have ticked up as of Friday. We'll have to see if we get a continuation of this upswing here, that tick upward on these short-term indicators. This is positive. They're oversold, and if we can see them bottom, I think that would give us more. I think it tells us that the hypothesis of a little bit of a bounce here or consolidation and then a continuation of a decline makes sense when I look at these indicators, because the short term, it's starting to turn up, might get that bounce or at least a pause. However, the intermediate term indicators are still pretty much in free fall, but they are very oversold. We have seen readings lower the beginning of 2016 on that correction in January. We saw our intermediate term indicators fall quite a ways. So we could see them move lower, and it does look like they want to move lower. No sign of real deceleration here. So short term, I think, looks pretty good. Intermediate term, not so much. UUP, I'm bearish. You've got a PMO sell signal on the way. I think we're going to go down here and test that support from the September low. And I would tell you that this level we're at right now, if we're not gonna, if we're gonna continue and if we're gonna see a rally in the dollar right now, we need to hold that 25.25 level. And currently we're sitting right at it. So I would like to see that hold. If that does not hold, you can see the PMO is ready to turn down on the dollar. I'm expecting lower prices for the dollar right now, a drop. And I think that's going to be great news for gold. Gold had already broken out. This is GLD, and you can see the PMO has now finally reached positive territory. Look at the scooter, huge improvement. I like this breakout. I would say the next area of overhead resistance, though, is looming here just below 118. I'll be interested to see how gold handles, how we get the prices if we can get that breakout. But I see the 20 just about ready to cross above the 50 to give us a buy signal. I think this is gold's time to shine. And you can see we still have very bearish sentiment going on with the discount rates being so high still on Sprott. And you can also see that there really is no correlation right now between gold and the dollar, sitting at minus 0.1. That's pretty much nothing as far as a correlation goes. So gold is free to do what it wants, and it's not necessarily going to be tied to what's going on with the dollar. And gold, I do like the fact we're seeing the PMO turning up, and we still have very bearish readings, like I said, on the discounts, and it's holding the support level. I suspect when you look at this weekly chart, it sure looks like it's set up to start making a move to the upside, and the PMO supports that. USO, we can see has found support right about 1475 along that 50-day EMA. The rising bottoms support seems to be holding at this point for WTIC. I've got the PMO sell signal. I suspect we're in for a little bit more downside as far as oil, but watch and see if this 1475 level holds. If it can hold through this sell signal and, the move out of that overbought territory, I think we could be lined up for higher oil prices. But right now, there's still some weakness out there. I'd expect at least some consolidation. And there you go. PMO sell signal is lined up on the USO weekly chart. We're not there yet, but about ready to be. TLT, you can see it's getting stopped right about that 115 level. I'm still very bearish. I know the PMO is turned up and the scooter did improve, but that double top executed, it was fulfilled. But look at the head and shoulders on the weekly chart. It has not, it's executed, but it has not fulfilled its pattern just yet. I'm expecting a drop. I mean, we could really see bond prices for TLT down to 90. At this point, I'm going to be looking for a move down to the 105 area, right where we had the 2015 support. And that's all I have for you for the Decision Point Weekly Report. Here is the summary. I will be posting this in today's Market Watchers Live recap, so I'm not going to read it to you. As far as the indicators, though, I did want to point out that they are oversold and they started to tick upward. I think short term, we're looking fairly good for a little bit of a rise or some consolidation, but unfortunately, the intermediate term indicators still aren't healthy. They are oversold, but they are still falling. And there you go for what I'm feeling about the dollar and gold. And then I'll also post this as well, what I'm looking at as far as oil and bonds. And that concludes this week's Decision Point Report. Time to wrap up the show. Can you believe it?
It flies. Time always flies by. And I'm sitting here right now looking at the sector performance today, and financials right now are at 0.00%. Consumer discretionary 0.06%. Communication services 0.19%. Healthcare minus 0.1%. I mean, there's just not really a lot going on. The only thing I'm looking at, technology is still underperforming. That's a problem, and that's why we're seeing the NASDAQ underperform. But yeah, you got technology right there down more than 1% today. And at the top, you've got your defensive groups, real estate, consumer staples, and utilities. So really hard to glean too much positive from what's going on today, even though I guess on a relative basis, it's better than what we had last week.
Right. I think it's, the money is rotating into that area of defense, which makes sense. And I think that could probably fuel a little bit of a bounce right now. But the fact that it is just defensive areas, that's a concern. I still think intermediate term, we're very vulnerable to a continuation of this correction.
Yeah, it certainly looks like that. I mean, you would expect after the huge sell-off last week in technology and consumer discretionary and some of the communication services group that, we saw a little bit of a bounce or, pretty decent bounce in those areas at the end of the week. And the NASDAQ had a huge day on Friday as a result. But there's just no follow-through here today.
Yeah.
And looking over the last week, I mean, you can see, of course, materials have been horrible. Financials, not so good. Industrials and technology was lifted up a little bit from that end of the week rally, but still, most areas just didn't perform well.
No. It was a bad week, pretty much across the board. Hopefully this week will be a little more healthy and not quite as painful.
Yeah, and I know when you were talking about, look like maybe from a PMO perspective and the fact that small caps have been so oversold, relative to the S&P 500, the Russell 2000 right now sitting on a pretty significant relative support with the S&P or versus the S&P. So that would line up maybe for a bounce in small caps as well. It's going to be very interesting to see what small caps do from here.
Yep, absolutely. And like I said, looking at those charts, they really pulled back. They're really oversold. I think that's the place we'll see a bit of a bounce here. But again, ultimately, there's a lot of weakness out there. I'm not looking for a pickup of a new rally here.
Nope. And maybe the Harris merger with L3 maybe that'll start to pick up some of the defense stocks, which had been languishing for quite some time. They're having a nice day today, but one step at a time here, no doubt. Everybody, you can see the upcoming schedule. We got a really good week coming up. Erin's got her workshop coming up tomorrow, and then we're going to have Martin Pring on, some great information for you later this week. Thanks to everybody for joining us today. We would love to get your feedback, so if you could complete that survey as you exit, that would be great. As a reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody, and we'll see you back here tomorrow. Happy trading.